Is Donald Trump, in the end, not manipulating us or even manipulating, but completely manipulating the market? That's the question we're going to answer. And above all, don't hesitate to share your own answer in the comments. I'd really like to hear your opinion. But Donald Trump spoke yesterday in Davos. It was honestly a roller coaster. And especially at the end, he announced something that had a very strong impact while also being very bullish. And we're going to talk about what happened over the past 24 hours, which were just absolutely crazy, with extreme volatility. So, needless to say, his speech made a huge splash and even sparked real excitement in the market, because he wanted to be reassuring. On one hand, by saying, I am not going to use force. And on the other hand, he reassured the markets even more by saying that negotiations were underway. We'll talk about that today. But what did he say? First, he said that there was, and he wants to sign the famous crypto bill fairly quickly. Because yes, he wants to make the United States the so-called world capital of crypto. But be careful, because this speech actually went much further than just that crypto statement. And that's where things get really interesting. Because he starts his speech by saying that he has some very interesting numbers and that the American economy is doing very well. Because, according to him, inflation has been defeated. We're talking about a core PCI at 1.5%. True. Inflation is also moving in the same direction. We have fourth quarter growth that could reach 5.4%, which is double the forecasts. I'll tell you about the results in the daily update. And basically, according to him, the economy is running better than ever. And in the markets, it's actually the same rhetoric, because Donald Trump completely downplays the recent dips, the recent corrections we've seen. He even promises that the market, I'm quoting, will double, will go up twofold. A moment of silence. Anyway, but that's not all, because this is where it gets really serious. It's when he talks about monetary policy. Because he's going on the offensive, he's openly attacking. Jerome Powell is at the head of the Fed because he claims that US interest rates should be the lowest in the world. By the way, we'll have a live meeting on the channel on January 28th. In 6 days, I'll be doing a special live stream to talk about and above all to follow this conference closely. And these numbers that are likely to come out and will have more impact than ever. Anyway, he also announced that there will be a new president coming very soon. He also went on to talk about NATO because for him, the United States, they give more than they receive. And he promises to defend NATO, but doubts that NATO would do the same in return. So here, he often says in his speech that he's there to defend the interests of the United States by trying to acquire Greenland, which for now is divided between the United States, China, and Russia. That's what he said, under negotiation, without the use of force. And in fact, this negotiation has already started very quickly. And that's exactly what we're going to talk about. Because Donald Trump has just outright cancelled, in a matter of seconds, the well-known 10% tariffs on the European Union, which were supposed to take effect on February 1st, so in 8 days. And as you can imagine, this didn't just fall from the sky. And the reason is simple, and above all, it's strategic. Because Washington and the Secretary General of NATO, whose name is Mark Rutte, I honestly had no idea he even existed before yesterday, I'll be honest with you, have found, or at least the United States and Mark Rutte have found, a framework agreement precisely about the future of Greenland and control over the Arctic. So in other words, that's not what we're talking about at all. We're not talking about trade here, but about pure geopolitics, which has an impact on the market, because the market reacted directly and positively here. We climbed back up to around 90,300, which is once again now the new resistance zone. And as I was saying, in fact, this deal, which we can call preliminary, paves the way for broader negotiations between the United States, NATO, and the countries involved to secure American interests in this area, which has become quite central for energy routes and mineral resources. Because there are rare earth elements and military dominance in the north. So, as a direct consequence, there will not be a 10% tariff in February, and there also will not be an increase to 25% on June 1st either, at least for now. So we're clearly in a tactical de-escalation right after several days of extreme tension. So what does that show? In fact, things really can change, can switch. In the span of just a few minutes, what happened yesterday was pretty crazy. And right after, precisely following Trump's announcement, what was the market's reaction? Because we saw an immediate and highly predictable reaction in the markets. Because if you follow the daily updates, by the way, thank you for your loyalty to everyone who likes, comments, subscribes, and joins the community every day. Well, you could pretty much predict this move even before opening this video. With every rise in trade tensions, we always saw the same scenario, with risky assets getting shaken up. I'm talking about Bitcoin and altcoins, the entire crypto market. And we saw precious metals soaring, actually playing their traditional role as safe havens. So it's a shame to see that Bitcoin and cryptos are still not and have never been and still aren't yet that famous safe haven, maybe one day. But gold and silver, in fact, are plunging sharply right now. I mean, literally in the minute that followed. Donald Trump's announcement, nothing surprising so far. And of course, if precious metals get slashed after the trade de-escalation, the other side of the market reacts just as quickly. Because we're talking about nearly $700 billion that flowed back into the US stock market in a single session. It's simply colossal, but above all, it's completely consistent with what we observe, not observe. I see your comments, I read them, I pay attention. So it's natural. Normally, I think I say observe, but observe, okay? I said it right this time. Big shout out to everyone who points it out in the comments. Julian, I can't take it anymore. You're grating on my ears because you say observe. Honestly, okay, I listen to you. So as soon as the risk, joking aside, as I was saying, as soon as the geopolitical risk subsides, well, I'm thrown off. Capital will instantly, or at least immediately, flow back into risky assets. So Bitcoin, US stocks that had been under pressure since the Greenland incident. So the market was just waiting for a sign of easing to trigger buying flows again. That's exactly what happened yesterday. And you'll see that it's not just that. It's not just the stock market, the equities market, that's benefiting from it. Because this kind of rotation, when it takes hold, always ends up spilling over into crypto. And speaking of Bitcoin, it had an absolutely wild day. Here's a very quick summary. You'll see it's pretty crazy. Here's the summary right here. Let me zoom in for you. But first, there was a lightning pump from $88,000 to $90,500, which literally wiped out $80 million worth of positions, short positions. Then a few hours later, there was a reversal. A brutal one, because Bitcoin went back up from $90,500 to $97,300. And this time it's the longs, so the people who were betting on the price going up, who get hit with 144 million liquidated in one go. Then comes the announcement that changes everything, because Trump cancels the tariffs against the European Union. And right then, instantly, the market turns the other way. And once again, it's the shorts, those who were betting on the price going down, who get wiped out. And we're talking about more than $200 million. So in 24 hours, over $1 billion have disappeared through liquidations. I warned you it was going to be volatile, but with Donald Trump, we've really been served. Looking at the 24-hour chart, it's absolutely crazy. And precisely, still in the news category regarding crypto, there's a doubt resurfacing once again because of the famous bill. The long-awaited one that could simply fail this time in the Senate, because the concept is actually quite simple to understand. The vote on January 27th, so in 5 days, will be crucial because either the bill will be strengthened, or we go back, or we end up losing years of lobbying and hundreds of millions invested in a clear regulatory framework. So, with this law, we're potentially at a turning point and both sides will have to align very quickly, otherwise it's back to square one. And when I talk about both sides, I'm talking about the Republicans and also the Democrats who can't agree and who don't have the same interests. Next, we're going to talk about this indicator, which honestly deserves our attention, and that's why I'm bringing it up in the daily update. I try to finish with an indicator because it helps us see things a bit more clearly from a technical perspective, since it's the proportion of investors in profit. Bullish and sustainable. You have to understand one thing. Having a lot of investors in profit isn't a danger in itself. Quite the opposite, because when the majority of the market is making gains, investors are calm. And so they don't feel the need to sell in a panic. And so the market breathes easier. And also the trend is naturally a bit more stable. But the problem only appears at the extremes. That is, when more than 95% or even 100% of people and supply are in profit, then yes, it becomes heavy. because the unrealized gains are so huge that a correction becomes almost unavoidable, inevitable. But today we're very far from all that. We're actually on the wrong side of the spectrum because only 71%, let me repeat because I speak very quickly, of the supply is currently in profit after having dropped to 64% during the recent correction. And this shows that there are a lot of investors who arrived late or even very late in the cycle, which makes the market even more fragile, more jittery, and much more sensitive to even the slightest bad news, especially. And the rebound of the last few days allowed us to briefly climb back up to around 75%, but we were almost immediately and very sharply rejected. And that means that part of the market took advantage of this breather to exit at break even, so at equilibrium, and to limit the damage. So two scenarios are now opening up for us. If the percentage of investors in profit continues to fall, we could see a new wave of panic with a very deep sell-off. But if the market manages to reintegrate and hold the 75 to 80% zone, then we could well rebuild a solid base for a real bullish recovery. We'll keep an eye on that and see you at the club's live session. It's in 3 hours. If you're interested, if you want to know my strategy, what I'm doing, what I'm buying, what I'm selling, what my outlook is, what technical factors, supports, and resistances to watch in order to prepare for 2026, I'll tell you everything in the club's live session. Many of you have applied. There are still spots left, but the countdown is ticking down very quickly. I'll put the link in the comments if you want to join this exceptional live session where I reveal everything about my strategy, my outlook, what I think of the market, and the key things to watch. And above all, how to come out a winner from this cycle, from the year 2026. I'll put everything in the description and in a pinned comment. And then I'll see you tomorrow for a new video. Until then, take care. It was Julian. #warrior. #Kojo. #whatever you want. You put it in the comments because I'm watching you guys. Ciao.